Good morning, traders. This is Michael coming to you from Gamma Edge on Wednesday, October 29th, with our pre-market prep session. As always, here at Gamma Edge, we'll start with our three pillars: sentiment, structure, and trend. Then we'll cover some individual equities and discuss whatever content that our viewers want to discuss. So if you're joining us on YouTube, make sure you just go ahead and throw that in the chat. If you're joining us on X, go ahead and pop a reply into this live session, and I'll look at it at the end of our presentation. So let's go ahead and jump right into it for today. Obviously, we always start with our market trend model. This is based on the tick index. You can research that at your favorite investing website. Quick orientation is the bolded white line is the cumulative tick. Basically, this is buying versus selling aggregate in the overall market. If you are a bull, you want to see this bolded white CT moving to the upside, indicating more buying versus selling of individual equities. And if you're a bear, you want to see it moving to the downside. Yesterday, towards the end of the day, we saw some weakness come in. I'm sure you've seen extensive and numerous posts on X as well as other places about the breadth towards the end of the day. The RSP was down compared to the SPX, and just a select number of stocks were leading the S&P higher. So again, what we do here at Gamma Edge is we take the data, we analyze it, and then we make a trading plan with our if-then scenarios. So again, yes, we did see some weakness towards the end of the day yesterday. We crossed below those shorter-term moving averages. So basically, this is just an indication to us on the tick US that you need to manage your risk appropriately. So if you're extremely long heading into the day, as the market continued to move up and then started to see a pullback, you can take some profit, you can reduce your risk, and then be ready for a possible pullback towards the colored ribbon, or this could resume to the upside today. Obviously, nobody knows, so we just manage risk appropriately. These shorter-term moving averages are basically our risk management line. If you cross below that and you're extremely long, then it may be appropriate, as I said, to reduce some of your risk. Looking over here, new highs versus new lows, breadth indicator, new highs were extensively outpacing new lows, so more stocks were being bought than sold. The one kind of yellow flag or canary in the coal mine was this filtered cumulative tick. This is institutional buying, plus 1,000, minus 1,000, larger block orders. Obviously, this was below the zero line and hovering around the zero line. So institutions were really not involved yesterday, as well as the previous day towards the end of the day. So we'll see what today brings. Obviously, we have FOMC and then some other news towards the end of the week. And then we're basically heading into the heart of earnings season for the Mag 7 stocks. So again, just keep this on your radar. Obviously, we'll be updating this, but a little bit of weakness towards the end of the day in the market trend model. So that just gave us a cautionary signal for the end of the day. Moving on to Tick RC, this is how we base our mechanical portfolios. Mechanical portfolios are still turned on, so any triggers for this morning, we'll be entering positions. The red continues to expand above the cyan. That will continue expansion as long as the bolded CT is above the colored ribbon. Obviously, this is our longer look back period and how we position money. I talked about it yesterday. I scrolled back and showed the people that are joining us on the stream how on the 20th this triggered to the upside, 21st, and basically we've been long since then. So we've captured a significant portion of the upside, and that's what this tool or market trend model is designed to do, as well as with our other tools and positioning of the SPX options market. So we're watching this. If this crosses below these shorter term momentum moving averages, then obviously we'll reduce our risk, and then we'll see how we handle a interaction with the colored ribbon if we do get down to that level. Now, if we resume to the upside, again, we'll stay long our overall portfolio. On a swing trade basis, as well as our longer term basis, will continue to remain long until we start to undercut the colored ribbon. But on a shorter term swing basis, we'll maintain and stay long as we are above these shorter term moving averages and manage risk appropriately if we do cross below those. So let's go ahead and move on to the sentiment and structure portion of our presentation. This is based on the SPX options complex. Obviously, the largest, most notional value. We separate the SPX options complex between, you'll notice up here in our web app, the SPXA and then the SPXP. The SPXA is obviously the AM expiry. This is what we call our cruise ships or our tankers. This is basically institutional or larger market participant positioning. So this steers the boat for the longer term. The call dominated structures continues to be maintained above and below spot price. So really no change there. This is obviously the November expiry via our web app tile turned on here. So again, as long as we're above the transition area, 6840-ish area, 68 or 6770 down here, those two transition areas GEX and DEX transition. You see extensive call positioning below us in the money calls. These will continue to be supportive as long as we're above these levels. And you see out the money speculation to the upside towards the 7,000 level. So again, bullish structure and sentiment via the SPXA heading into the November expiry. Now the SPXP, again, all expiries turned on over here. We'll cover 0DT in just a minute. Call dominated above and below spot price. Again, you'll notice the extensive green in the net delta column. This is just indicating that call speculation is alive and well and positioned throughout the overall complex. Now you'll notice the GEX transition here, 69.15, 69.20, but the DEX transition down here, this is due to some positioning for today. So again, staying above these key areas is important. Again, as long as we stay call dominated along this overall net delta structure via sentiment and positioning, these should continue to be supportive. And we've discussed that before. Once we start to see an erosion of the out of the money call speculation, then we start to see the reds appear up here. That just means that the out of the money speculation is starting to drop and exposing the in the money puts overhead. Again, this provides a headwind for us to move up. And then it will see these green net deltas below us. These will start to close or get overran with out of the money put speculation to the downside, and these will start to turn red, and then we'll become a little bit more cautionary. As of now, complete bull structure, looks good on any pullback and move to the upside. Obviously, key levels you can see via the web app. All right, let's move on to the SPXP GEX ratio. I talked about this yesterday, that we were seeing a negative slope and a drop. Basically, this GEX ratio, or what we call our gamma edge ratio, is short-dated call gamma versus short-dated put gamma. So this gives you an overall understanding of what is happening instantaneous within the overall structure via the SPX options contracts and positioning. Now, obviously, you want to see this ratio rising to the upside as the SPXP is moving to the upside. This would indicate short-dated call speculation is outweighing short-dated put speculation. Obviously, above the one line means bulls are in control, and call speculation is taking control of the overall structure and complex. But obviously, we also want to have a confluence of price up, GEX ratio moving up, which obviously, again, would indicate that out of the money call speculation is driving the bus and the overall price. So when we see the price continue to move up, but the GEX ratio drop, that gives us a little bit of cautionary. As I talked about yesterday, we were reaching extremes in the overall ratio. Usually historically, if we scroll back, that we've seen a pullback in the overall market when we reach these extremes, or at least some sort of consolidation. So again, we would not be surprised if we see consolidation or a slight pullback within the overall SPX, as we're seeing this GEX ratio drop and reach an overall extreme. Now, this could just drop. This could be out of the money, in the money call speculate, or in the money calls profit taking, as well as out of the money calls being reduced heading into FOMC. And then once that the event is passed, then we could see this resume back to the upside. Again, that would be speculation and the GEX ratio in a positive slope. And then we could see SPX moving back to the upside. So again, really no extreme warning from where we're at right now. We're above one. Bulls are in control. Call speculation is maintaining. Just a little bit of cautionary as the GEX ratio continues to drop as the SPX trends sideways. Or if it does move up and the SPX and the GEX ratio continues to drop, then that'd be a negative divergence, and we'd be a little bit more cautionary for price appreciation. Hopefully I explained that pretty well. If not, go ahead and ask questions. Moving on to the SPXP delta balance. Again, this is what we separate the positioning of market participants, the SPX options complex above and below where the spot price is. So the green dotted line is the right-hand plane, or what we refer to RHP. You'll notice down here, this is your out of the money call speculation above spot price, as well as if there were any in the money puts. Again, as long as we're above the zero line, call speculators maintaining overall control. We like to see a positive slope in this out of the money call speculation. Again, if the tail wags the dog for the SPX, then out of the money speculation would continue to help drive spot price to the upside. Again, we see that over here staying above zero and future expiries into November. Transition to the upside. So again, speculation maintaining. So really no change there. Bulls are in overall control. The red dotted line is the left-hand plane, LHP below spot price. Again, this is your in the money calls. So again, these continue to be supportive as we have a positive slope here, and the out of the money put speculation. So what would we look for if we're seeing a change in overall sentiment structure or sentiment and structure. Well, the right-hand plane would drop dramatically. That would be your out-of-the-money call speculation dropping. That would be exposing your in-the-money puts. And then the left-hand plane would continue to drop below zero. This would be your in-the-money calls, either monetization or expiry, and that would expose your out-of-the-money put hedging, and that would be dropping below the zero line. But as of now, we're not seeing any of that at this instantaneous moment or projected on out in time. And the aggregate of those two with the blue dotted line is our delta balance, again, being maintained at 1. Bulls are in control. Any pullback should be supportive, and we should continue to look for upside or at least sideways type action. All right, let's move on the SPXP 0DT structure. What I spoke about this morning is the transitions are not congruent or confluent. You notice the GEX transition here, 69.15, 69.20, but our DEX transition, is extremely wide. Again, this is driven by a wide drunken sailor range, as well as positioning via the overall SPX complex. Again, we notice credit debit spreads as well as put spreads also positioned through the overall SPX option structure. So again, this is driving the wide transition. Again, this could be choppiness action as we head into FOMC. The overall thesis for me or the team heading in today would be sideways price action, most likely right under the 69.15 to 69.20 level within the overall drunken sailor range, as well as the transition areas until we get through FOMC. And we'll show that on our trading view chart here in just a minute. Call dominated above and below spot price. Again, you'll notice the net delta columns, as we just covered via the delta balance, is call dominated. So again, any pullback should be supportive, even all the way down towards the bottom of the drunken sailor range. If we get below the drunken sailor range, then obviously we'd have a significant change in sentiment, and most likely some news or exogenous event came out to change this significant position. Again, as we head into the day, we're call dominated above and below spot price. Net GEX is fully bullish via 25,000. But again, this can change throughout the day, depending on what the news happens, as well as market participant positioning. So we'll move on to the SPX, a trading plan for the day via the trading view chart. Again, these scripts are available for Thinkorswim. So today I put in the 0DTE script. I know some people were asking and sending me some messages why I use full expiry and then overlay the 0DT transition. So today I decided to load the 0DT. This obviously matches the web app, those levels we just discussed. And you'll notice this morning here that 69.15 is an important level. Obviously, that's negative GEX in trans. And then we need to get through that to head towards zero GEX, as well as P trans and plus GEX. Obviously, entering a little bit more positive call dominated environment and structure if we get above those key levels, if you reference the web app. So thesis for today heading into the open would be that we could test up here to 69.15, 69.17, even up towards 69.20. And then we'll see how that reacts. I would anticipate that we'll just have choppiness, sideways action into the FOMC announcement, and then we'll see how we come out on the other side of that. Really not expecting significant upside, as we've had a large move, obviously, to the upside in some individual equities yesterday, not necessarily SPX, but we were testing 6,900. So some consolidation and sideways digestion would be probably the likely thesis heading into today. So with that, make sure you come join us at gameedge.us. All the tools turned on. 14-day free trial newsletter. Go ahead and go here, put in your email. You'll be delivered that on the weekend. This covers all of our tools, thesis, and how we approach the overall SPX options market. Free courses. Game Edge Fast Pass is our flagship options course. Make sure you sign up for all of this education. Then you can sign up for these other free courses also. And then click on the pricing tab. This takes you to our Discord, our WAP portal. You can join us in our Discord. Again, 14-day free trial. All the tools turned on. Game Edge team is in there helping traders, as well as an extensive trading community of traders with different backgrounds and experience levels, helping you get up to speed and use our tools and dispel the myths around Gamma, Delta, Vanna, Charm, and everything else that is occurring within the overall SPX option structure. So with that, thank you everybody for joining us this morning. Go ahead and throw in some tickers if you want to go over individual equities. Obviously, I know NVIDIA had a significant move yesterday. AJ, yeah, we'll talk about it in a second. let's go over NVIDIA real quick. Call dominated above and below spot price. You'll notice 200 is PGX and COI. That has been the target basically in the overall positioning. We do see with this expiry towards the end of the day or end of the week, it moves up to 205 and then 200. And then after this expiry, we actually see the structure continue to advance towards 210. So yeah, we could definitely see NVIDIA with the out of the money speculation to the upside continue to advance. So AJ, you said if green delta is above, turn red, that is bearish. You can watch that real time, or is that once per day? So you can watch it real time, AJ. Basically, that would be with our intraday vol-m tool, as well as the web app. As the price moves up and down the structure, the net OI would not change, but we recalculate the Greeks. So how can I join the 14-day free? It takes to a site where no one responds. Priscilla. So anyway, AJ, yes, you can watch that intraday. If you go to the pricing tab here, this will take you to here, and you can sign up monthly or sign up annually. So if you click on the sign me up monthly, it takes you to the WAP portal, and this is where you check out, and then you'll be given the instructions how to get into our Discord. So hopefully you're entering the right thing. But yeah, this will take you to the WAP portal, and then you'll be given directions on how to get into our Discord. And you'll get an email that gives you all of the education as well as all the instructions of how to enter the website and our Discord. So let me know if you need anything else. All right, TTD. AJ, I hope that answered your question. But yeah, our tools in the Discord or in the Discord are real time. So TTD, call dominated above and below spot price. We are within the overall transition area. We do see obviously the red. So this is out of the money put hedging below. I mean, we are call dominated, and PGX is 55, COI is 60. 55 is PGX and COI for this expiry. November, we do see the structure advance here up towards 60. So again, that looks promising. The main thing with the COI, or sorry, the total OI is it's only 30,000, Nick, on the TTD. So not under significant dealer metric control. That would be the only chink in the armor. So no, it's not the WAP chat. You just sign up for the, okay, yeah, you go to the WAP portal, and then you sign up here, click join, and then you'll be provided an email as well as our Discord link. So make sure you let us know if you need anything. Yep. Yeah, so TTD looks good. TTD looks good, Nick. Main thing is obviously low OI though. So what do you see for INTC for monthly expiry? Well, we'll check it out. AJ, thanks for joining us. We'll look for the full expiry here. So call dominated, 45 to the upside, PGX COI. End of month, 45 is COI, PGX is 42. So we're right at that 42 level. After this expiry, the structure really doesn't advance much. So 42. So I would not anticipate 45 would be the cap on price. And you see COTMC there. Obviously, that's out of the money calls go in the money at the peak sensitivity point. So historically, this is an area where we see profit taking. And then you actually see the structure drop after the 7th down to 40. So I would not anticipate a significant amount of upside in INTC. And then after the monthly expiry, though, we do get back to 45. So I'm going to say you're probably upside is capped at 45 unless you see the structure advance significantly to the upside. So 42 is probably going to be hard to push through, at least through the 7th. And then the structure drops after the 7th. And then towards the end of the month of November, you see it advance to 45. So that's why I don't know when INTC's EPS is either. So this could be EPS related too. So yeah, so make sure you check that. So. All right. Thanks everybody for joining us. I'll hang around for another couple minutes. Let me know if anybody needs anything. Again, the main thing for today is obviously heading into FOMC. I would assume most likely that price will be sideways, digestion, and we'll be watching these key levels overhead. So Tesla, please. Yeah. look at Tesla. I'm sure it hasn't changed much. It's been extremely bullish, populating all of our scans. 500 still continues to be that target to the upside. So 470, 500. So peak X is 470 through the end of this week, and then 500. So it's bullish. We're above transition. Everything looks good. So 500 to the upside. I'm not sure when Tesla's EPS is, but yeah, everything looks good on Tesla for a move up towards 500. So I would, if you're in it, I would obviously stay the course unless you see something significantly change within the overall SPX, or within the option structure and sentiment. But 500 through all expiries continues. You just see me clicking through here. Now, through the end of November, I guess you do see it drop there, but our OI drops significantly. So we're not really, the OI is not populated a lot through the end of November. But through most of November, 500 looks like that out of the money target to the upside. So, all right. Thanks everybody for joining us. Everybody make it a great day. Like and subscribe on X and YouTube. You'll be notified when we go live. We'll try to do an intraday recap today. No, it is not, Perry. It is extremely, not extremely, but it is 0DT for today. It's called dominated above below spot price, 25,000. Choppiness action within these overall transitions is most likely the MO for today, heading into FOMC. And GEX and DEX transition, obviously confluence overhead, 69.15, 69.20. Those would be the areas I'd look for resistance. I hate to use the resistance level, but stalling price action to the upside unless we see out of the money speculation. So, all right. Thanks, everybody. Make it a great day. We'll see you later.